Welcome to askSlim Live with Matt and Arvy. This is going to be an informational webinar reviewing our upcoming popular services preview, our premium services preview, which starts next week, Tuesday. Before we get started, we just need to take care of some quick housekeeping details here. Everything on askSlim.com is for entertainment, informational, educational purposes only. Should not be construed as investment or trading advice. Any information that we post, any oral, any video, referring to, relating to our site, could be possibly used for investment decisions, should not be construed as such. You should consult your own investment advisors or investment decision makers. And what we share does not function as a substitute for that advice. Consult your financial professionals before making any investment or trading decisions. askSlim Live events are likely to be recorded, as this one is today. We will offer these up on our askSlim.com website, and at times are offered to the general public. We always act in ways that protect your identity. However, we cannot guarantee that your identity will be completely held anonymous, so your participation in this event is an acknowledgement that you understand and agree. Please refer to our terms, disclaimers, and full legal at askSlim.com. All right, today's hosts. You have myself, Matt Serpe. We also have Arvy with us today. And Arvy and I, as most of you know, are proteges of Slims. Both of us have been thoroughly trained and coached by Slim for many, many years. And we have significant additional outside market experience and have a huge and deep passion for the financial markets. Our goal at askSlim is to bring active traders and investors all over the world the ultimate and professional grade technical analysis services, trade planning tools, and trader development education. Our methodology is built around Slim's more than 5 decades of experience as a professional trader, technical analyst, coach, and mentor. So we're here today to review and provide a walkthrough of the services that will be available as part of our upcoming free premium services preview that starts, as I mentioned, next Tuesday and will run through Friday, June 25th. So this should be an awesome opportunity for many of you who have not had an opportunity to benefit, experience, immerse yourself into a number of our most popular premium services. This would be a fantastic chance for you to do that. The PSP will be available for all free level through level 2 members that have access to askSlim. So all you need to be is a free member, or obviously through level 2. Our level 3 and 4 members currently have access to all these services all the time. So there'll be nothing different for our level 3 and 4 members. I'll show you in a second that for everyone else that are level 3 through level 2, the new services and tools will be added to your askSlim dashboards. But again, you will need to be, if you're not yet, an askSlim free member to be able to participate. So we are encouraging questions throughout the presentation. What I'd like you to do is, as we go through the services, please post your questions into the Q&A. And we will do our best to answer as many as we can during the hour or so limit for the webinar. We will also be providing a replay of this event likely by tomorrow, so you will have access to that. Just a quick question, if you could show by raise of hands, how many of you, this is the first time attending an askSlim Live event? Okay, so there are a number of you, that's great. It looks like you understand how to use that raise hand. There is a chat and there is a Q&A tool, so make sure you put the questions into the Q&A. Okay, so next up, before we're going to review each of our services, we want to set a framework for the discussion. So how many of you can see my slide here that talks about how trade planning is how you get from A to Z to your entry and exit, and you strip out the noise in an always uncertain environment. So if you can see that, just raise your hand. Okay, good. Looks like everybody can. So what we want to do is you want to establish a decision-making model, a methodology that suggests the evidence of the likelihood of one outcome happening over another. And then we want to take that analysis, that evidence that you collect through your methodology, and convert that into an objective trade plan. So that's the framework that we want to think about as we go through these services. This is the framework that we use as we design and create these services and tools for our members. It is with that in mind, so that you, as a trader, as an active investor, that we're able to assist you with your trade planning so it can be as efficient and as effective as possible. And as you hear us talk about a lot with trade planning, we feel it is a must for consistent and ongoing trading and active investing success. So there's 5 core trade planning questions that we look at. Now, obviously, there's a number of other complementary questions, but these are the core ones that we look at, that as an analyst, your method needs to be able to determine for you. And then as a trader, you need to be able to then answer these as you decide to put on your trades. So what's that time frame for your setup? Is it going to be an intraday trade, a near-term trade, short-term trade, intermediate, longer term? So we've designed our methodology to capture the analysis throughout these various time frames very purposefully, and we'll talk about that as we go today too. Obviously, you want to think about what's the directional bias. So what is the information telling me so that I can frame it in terms of a directional bias? Number 3, what type of trade does my analysis suggest is setting up? What are my signals that the trade is a go? Am I someone that wants to look at a positive trend, or as you hear us talk about a positive cycle configuration, and you're waiting for that pullback into, as an example, a support zone or buy zone? Or are you someone that looks for a breakout opportunity in a positive trend, or a downtrend and a breakdown opportunity? So you want to think about that question. Ask yourself, what is this trade that I'm looking to put on? What are my signals? What are my studies telling me in terms of that now it's time to execute? It's really important to get down to that granular level and understand your decision-making process as you build out that methodology, and then convert that methodology into a plan. Obviously, you want to determine where your favorable entry and exit areas. So you want to have that methodology in your analysis, be able to provide that to you very clearly so you can make that decision. And number 5, what are those levels or changing technical conditions that suggest I have to reevaluate or close out that trade? As I mentioned, there are other ones, but these are the 5 core trade planning questions that you always want to ask yourself as you're getting ready to execute that trade, as you go through your analysis. And this is what we think about very deeply as we do construct our tools, our services, and as you'll see with our trade ideas, is an excellent representation of this process. And RV goes through this process every single day with our trade ideas, every single day as he reviews all of our charts that we have in our universe. And you'll see Slim and another one of the services we'll talk about here through Future Speak. If you haven't ever seen one of those videos, I'll talk about that one, where Slim takes a good hour and walks you through various markets and talks about our methodology and how those set up for trade planning purposes. All right, so now that we've set the frame for the services here, we're going to jump in. We're going to talk about each one. So the first one we're going to look at is going to be the SIR, which is our stock index report intraday grid, which is part of our ChartStreams broadcast that we do each day. Okay. What I'm going to show here, though, is just an example. Here's the draft of what our free members are going to see when we get to next week. So in your dashboard will have the new popular services. Our premium services will be available during the preview period. So it's going to be very easy for you to access it. You're going to go into your log into the site, go into your dashboard, and those services will be available to you in that dashboard environment. Okay, so like I mentioned, we're going to first look at the SIR intraday grid. I'm going to pull up today's grid. So this is live right now. I'm just looking at the NASDAQ's very strong today. So before I get into the details of this grid here, first of all, I just want to make sure again everyone can see this. If you could just raise your hand if you can see the intraday grid here. Okay, excellent. Very good. Okay, so this is intended for short-term traders, but more specifically intraday traders. And many of you who plan for one to many trades per day. This is delivered pre-market. Typically, it is delivered via email between 8:15 and 8:25 a.m. There is also a way to access this, and we'll make sure that it is available as part of the preview period. So be in your dashboard. There are times from time to time when the emails, for whatever reason, get sent to spam, may not appear at all, or get delayed for 15 minutes, a half hour. It's happened before. So make sure that you go onto your dashboard. If you do not get it by 8:30, there's probably some issue with the email delivery, and you'll be able to access it directly from there. So we always post the link into the dashboard as well. So that'll be an area for you to be able to get it if you're not getting it by email. So this is constructed on a 15-minute chart using a proprietary blend of technical tools that we have with the thinkorswim TDA platform. All the analysis is performed independently of each other on the cash indexes. So we have on the left here, this is the S&P 500, NASDAQ, and the Russell 2000. We establish these levels pre-market. And what we're trying to do is delineate to reflect the highest probability of where the intraday price will likely pause, consolidate, accelerate, continue, and reverse. Each morning, the analysis is revisited and newly formed based on all available information, data, including the potential for pre-market impact. So it is important that you look at a fresh grid each morning. We do send out a new link each day. There is some value to the past grids, but again, the current grid is the one with the most relevant analysis for that intraday or short-term period. So there are 5 primary components that are on the intraday grid. We have the resistance and support levels. So those are the red and green horizontal lines. So I'll show you that right here. So this is a resistance level. This is a support level. Now these resistance levels then convert into or trigger into the acceleration zone once they are violated. So what we're looking for is the highest probability opportunity, again, for an acceleration, where we can capture some points either to the upside or to the downside, where we have that highest probability opportunity for an impulse move. At the same time, we want to identify where the other key levels are in terms of the general resistance or support areas. And so the lighter shade of pink is a resistance area, and then we get into the key intraday resistance area. What you see here is that deeper red area. And it is in the deeper red areas or the deeper green areas where we would expect it to the price action to pause or likely even reverse, as we saw today. It's typically an area where we expect it to struggle to get through on an intraday basis. If it does, it's usually a sign that it's very strong in the short term. You can see today that the SPX got into that zone, pulled back, now it's chopping around, but is still acting fairly strong. So we'll see if it can make another move through it. So again, when you look at these, the key in terms of the levels is going to be the acceleration triggers. And that's going to be the green horizontal lines, and then also the red horizontal lines. These serve as your triggers into the acceleration zones where we would expect an impulse wave through a minimum of 50%, but a likelihood, especially if the reversal scout is in the direction of the acceleration. So as you can see today, we have the reversal scout positive. And so there's a very high probability that when getting into a acceleration zone, that we would penetrate all the way through it. Some of you might be asking, why do we have a blue color up on the top here for one of the zones? Well, that's because similar to the pink and red zones, the light and dark blue zones are meant to represent an expected intensity of resistance areas. So the darker the color, based on our intraday analysis, suggests the expectation of thicker turbulence. So from an analogy standpoint, the lighter colors like clouds and the darker is similar to a storm. And the blue resistance zones, instead of pink and red, is because it represents that an index is what we call is in a blue sky territory. So it means that it's now an area where we'll be printing new all-time highs, and therefore it's cleared all the previous price level resistance. Okay, now this information we're viewing today, there is a usability resource area that we made available to you as well. And we'll make sure that that is in the dashboard. So if there are some questions on this, I hope there are. We'll get to those as soon as we get through all the services. So again, this is the SIR Intraday Grid. It will be sent out and made available each day pre-market by email. It'll also be accessible on your dashboard. All right, the next is another one of our chart streams. So we have 8 chart streams that we broadcast out each day. I just showed you the SIR intraday. So for the popular services preview, we are also going to make available the SPX live stream. So this symbol, we're going to move this over into your dashboards, and it is very easy to access. The SIR intraday grid will be running on Zoom, and then we have an internal broadcasting platform for other chart streams. I'm going to click on it. You can see there's a play button here. So I'll press the play button, and that will now bring me into a live feed of our SPX multi-time frame grid. So this grid here has been specifically created for near-term and short-term traders. So we define near-term as next 1 to 5 days or sessions, and then we look at short-term as the next 1 to 3 weeks. So this grid has been set up to provide you with some very key information. So it's meant to be part of your overall trade planning toolbox. But it's overlaid, so this grid is overlaid with our key proprietary indicators and studies. And essentially, it's going to give you a snapshot of the technical insights at any moment of the trading day, your directional bias, and then some valid trade setups based on our methodology. Again, this is not, we're not telling you to buy or sell, but we've defined a set of guidelines that we look at utilizing our method that would suggest whether something is bullish or bearish. You have a bullish trade setup, a bearish trade setup, and we've also organized it such that you can use the multi-time frames to help with that decision-making process. So we do have a usability area for this as well. We'll make sure that that is made available. But just to give you a quick perspective on this, so we have the 15-minute chart. We have our 2-hour chart, we have our daily, and we have our weekly. So for our near-term traders, what we look for here, let's see if I can move this up a little bit. What we look for is, again, I talked about earlier about trade planning process in terms of number one, we want to be able to forecast. So there's 3 areas you want to be able to forecast. You want to be able to forecast in direction, time, and price. So that's what these are established to help with. So as a near-term trader, someone who's looking at the next 1 to 5 sessions, we start off with asking ourselves, what's our directional bias? how do we establish that? So what we use and what we provide to our members is this grid here, and we focus on our 2 key momentum indicators. So that's our slim ribbon, which I'm sure most or all of you have either used or heard us talk about for several years now. And then also our reversal scalp. So what we look for is, what is the condition? And currently the condition, as you can see just today, we had a little bit of a pullback here, which the reversal scalp warned us about. That was the other day. And now the reversal scout and the slim ribbon have both turned positive. So what this would say to us is that your decision making in terms of directional bias would be focused on the long side at this point. If we are following the rules, the guidelines we've established, I can tell you from experience, even though anything's possible, every day in the market is unique, that over time I've witnessed that being with the direction of momentum or trend is likely to provide you with the highest opportunity for those impulse movements, and the surprises typically happen in that direction of the more dominant trend or momentum that is occurring. So we look in that 2 hour if I was a 1 to 5 day trader, and then we're going to look into the 15-minute for our signals, and we look for the slim ribbon and we look for the reversal scalp to match up. So we look for alignment. We want to find alignment between the dominant directional bias for the time frame we're looking at. So we're just talking about 1 to 5 days right here. And then we come over here and you can see that today we had a gap. So we gapped up about 42.06-ish. And then we've run now another 18 points. So that's how we combine these two. And then over into the other chart here on the daily, we use for position sizing. So if the daily momentum and trend matches up, is in alignment with our 2 hour bias, then we would look to have a little bit larger position size in terms of, we're not telling you, to trade larger or smaller. This, again, these are just our guidelines that we use to create a structure for this information. But we would look to the daily here. So the daily is positive. So if we were looking to make some position sizing decisions, that would suggest that we can have a more fuller position size. So as an example, if a full position size, just to use an easy round number, was 100 shares or it's 10 contracts, then you might look to have something closer to half or 75% on your position sizing, because you're matched up with the daily being positive. If the daily was negative, you would want to stay more cautious. Again, these are just our guidelines that we use because we do not have alignment in the more dominant longer term time frame that we would be looking at. So that is for that near term. Those are the directional bias support decisions that we use. So we're looking at our reversal scout, we're looking at the slim ribbon, and then and the 2 hour, and then we look at the 15-minute for our signals. Now you might be asking, well, what are the other studies that are on here? Well, these other studies are all complementary, and they help us form a sum of the evidence. You hear us talk about sum of the evidence a lot, and Slim's coined that phrase. So we have the PO, the slim ribbon PO, which is an excellent tool to help with momentum confirmation. So you can see here that the slim ribbon turned positive, reversal scout's positive. As traders, we're asking ourselves, is there an opportunity to re-enter a trade? Or if you've exited a trade, for example, when we get into some short-term resistance, as we provided here, when you get a pullback, how do we know that there's, where are those spots? Where are those higher probability entry opportunities? Well, we give you a lot of that information on here, and the slim ribbon PO is an excellent guide for that. So you can see that it fired positive here, which confirmed that the dominant momentum was still positive. So when the PO was going oversold, the momentum was holding positive, and then the slim ribbon PO fires that we're the directional momentum back in the positive condition is likely to resume itself. So that's what we're looking for with those signals. We also have in here the stochastic momentum index, which is another helpful directional bias tool. It also helps to get a sense of when something's very strong or there might be some divergences occurring. So we use that tool to be supportive for directional bias as well. And then we have our market condition indicator, which is another complementary tool for directional bias. So as you look at this today in this 2 hour, you can see at the moment that all three of the complementary studies that we use are also suggesting a positive condition. So that's why these are in here to help formulate that information. All right, for the short-term trader, someone who's looking at the next 1 to 3 weeks, what we do is we shift left and we look at the daily chart. Again, this is a 1 to 3 week kind of outlook to get a sense of that directional bias. And you can see that the directional bias shifted positive here. What are we looking at? We were looking at the, excuse me, the slim ribbon and the reversal scout, which both turn positive. So that would be suggesting that your decisions regarding bias would be leaning towards the long side based on that information. Then what we do is we look at the 2 hour for our entry signals. And you can see here, I'm actually going to pull up the live version of this. It'll be easier for me to maneuver. You can see here, this was on 520, 521, where we had the slim ribbon and the reversal scout go positive. We broke through some key minor resistance, and that opens up an opportunity for a trade here, short-term trade opportunity. So that's how we look at it. And then the weekly chart here is a position sizing indicator for that short-term decision making. So again, we have our daily chart that we use for the overall bias. We have our 2 hour chart for the signals. And then we have our weekly chart for our position sizing. Right now, you can see that the momentum has flipped negative, although very neutral in terms of the slope of it, but it has turned negative, which isn't surprising based on all the chop recently. But we're watching that closely to see if that can hold the week negative or if that's going to shift positive here over the next few days if we get another move higher. On the daily chart, you also get to view the slim ribbon PO, again, the stochastic momentum, and then we also have our option bias indicator. Again, all of these are complementary tools to help with directional bias. And then also the stochastic momentum, again, helps with getting a sense of the power of the move in terms of it being, as you can tell here, is very, very strong with the overbought condition. But typically when you have this type of overbought condition, that's not a negative. That's typically something that's very positive, suggesting that there's likely another move higher. And that's what we saw here multiple times. And as of right now, it has also turned back positive. We were getting up near that 75 level. So on these charts right now, we still have positive signals as the SPX looks to make another run at new highs. Also, we have on this daily chart our cycle analysis. So again, we are trying to assist with the trade planning so that you can forecast direction, price, and time. So that's obviously what one of the major benefits of cycle analysis is to give you a sense of that time, the expected money flow, movements. And right now, we're just entering into the peaking phase. There is a minor low due here about a few days from now, but we'll probably get, based on the current action, another rally higher maybe into this next fib zone up here, where we would get into this fib zone here in the peaking phase, as we've outlined before we have an attempt lower as we get into the late peaking and declining phases. So again, this is an excellent way to get a quick snapshot of the conditions. It is a culmination of all of our indicators and studies all in one grid, and it is specifically designed for the specific time frame that you are looking to trade. So again, that near-term trader 1 to 5 days, or that short-term trader 1 to 3 weeks, it's an excellent tool to have. Now, as a sidebar note, this grid for our level 4 members is available in its raw format. And what that means is that as a level 4 member, you can plug in any symbol you'd like, and you would get to see how our studies and indicators react based on the symbol of your interest. So level 4 goes from essentially being able to see 7 or 8 symbols to, being able to see, a couple thousand or so symbols and how those react when they're plugged in with our studies and tools. And if they are part of our 84 focus list, then you can also import our cycle analysis and get the complete picture of our method here for those 84 symbols. But for a couple thousand symbols, you can see all of our tools and indicators on those. All right, so there's a multi-time frame grid. A lot to digest there, and it may seem complex, but for those of you that are experienced traders, analysts, the markets are complex. They're extremely complex. At any given moment, there's millions and millions of traders, intraday traders, short-term traders, near-term traders, long-term traders, position traders, investors, all acting on the markets. So you have to have a method that is a reflection of the internals in terms of the behavior, the true market behavior. And that's what we've established as a way to be able to cut through that noise, to be able to unpack and really digest what's happening and create a structured plan around it. All right, next we're going to move on to the daily snapshot that is going to be included with the preview. So the daily snapshot is published each day. It comes out between 4:30 and 7 p.m. Central Standard Time, but you get it every day, and it's pure technical information for those of you that love technical insights, key levels, annotated charts. This is a great report. It is a deep dive for the indexes, and you get great details on directional bias, key levels, trend and momentum readings, our handcrafted annotated 2-hour and daily charts with our cycle analysis, our custom indicators. So I'll just do a quick preview of this, and then I can answer questions later on it. So you get the 3 indexes. We get a technical evidence comparison. Again, this is our daily snapshot report. So SIR stands for Stock Index Report. That's our abbreviation for that. So we give you a technical briefing. This is very technical in nature, but like I said, if you like numbers and you like to know the levels, every sentence in here has meaning to it. And at some point, I'll unpack each one of these so that we can walk through it together, so that you can really feel the logic that is put into this report. But at a high level, what we want to do is give you what's the directional bias for the next few days to few weeks. So we have a proprietary formula that takes into consideration our technical evidence at multiple time frames, and then gives us a reading. And that's how this slightly bullish or neutral or slightly bullish to neutral, those readings all have meaning, and they're not just hand waved. It comes from a formula that we use based on our technical evidence that we have. So right now, as of yesterday, it was slightly bullish, but if we close like we're doing today with the reversal scout and the slim ribbon positive in the 2-hour, it's likely we're going to shift back to bullish, which would then suggest again that we're making this push higher to new highs. So the index notes in here. So we covered the SPX. We give you, those key levels. We want you to know where those key highs are. We want you to know where the key lows were. We want you to know, are we currently in a positive configuration? Again, take the step back to what we talked about earlier with the trade planning. 3 things: direction, time, and price. So that's what we really try to cover to make sure that we have a good sense of that each time. And, we give you those levels. Remember, we talked about reevaluation. So right now, what's the reality is the positive pattern structure is going to stay in place until we see some key levels violated. So we try to give you a sense of that. And, so it's got a little room, little ways to go on the downside to do some damage. As of yesterday, 41.27 was a key level that would suggest we probably neutralized the positive structure and would open the door to some downside risk. It's got a long way to go to really damage the intermediate positive structure. Anything's possible, but at this point, both of the structures, the short term and the intermediate, are positive. And it's been a long time that these have been positive. However, it is what it is. And again, if you just go at the simplest level, definition of an uptrend or downtrend, it most likely will keep you out of trouble over the long term when you're trading. Whatever time frame you're using, if you can identify those structures and those trends, it's likely to keep you out of trouble. There's also the similar information for the NDX and also the RUT. So it's a great report to digest. It might take you some time. You got to think it through. But again, if you for those of you that have done this a long time, for those of you getting started, this is it's complex. The markets are complex, but we try to, again, break it down in a very structured and logical way so that you can establish a plan within an uncertain environment. And that's the key, to be able to go into each trading day confident with your plan. We have no idea really what's going to happen, but what we're trying to do is establish a probability of that one outcome happening over another, and using all the tools and resources we have to make that possible. So you got your key levels, again, trying to make that stuff very clear, technical evidence, tables. You can see that as of yesterday, we're still positive on the short term. So what does short term means? We're using our daily charts. Near term means we're using our intraday charts, our 2-hour charts for the data assimilation for this technical information. So you can see here that it's been since 3.9 our trend. So we have a proprietary trend condition tool, and that turned positive on March 9th. That's how important it is to understand those kinds of things, the trend the best you can. Momentum is going to be more sensitive than trend, right? Trend's going to lag the most, but it's going to really keep you in those trades the longest, or give you a sense of what the highest probability is than any other tool. And cycle analysis helps with trend condition. So that trend, the cycle configuration. So we'll look at an example of that. And then we got our 2-hour charts in here, the annotations. These are all updated each day, new levels. We identify when we put key levels in, especially these fib levels. So this was 5.6. Why is that important? Well, because this gives you a heads up. So we identify this early on, is probably somewhere around here. The dates aren't on the bottom here, so that you have you're ready for that. So if you're long side trade, you have maybe first target's here, second target's up here, and then whatever the plan is, but you might be taking some or all of it off, right? And so these annotations are done in advance to give you a heads up on key areas to watch for. Daily chart, same for NASDAQ, same thing. Same for the Russell. And then, you give you the table. So you can see what, comparing them together, what the conditions are. And you can see here the short-term momentum and trends have either positive or neutral and positive here. You have still some back and forth on the intermediate. The Nasdaq's been weaker on the intermediate momentum. And then we have our market condition indicator. Right now, all of them are above positive. So we look at a reading of 25 or higher as positive. So all those readings are positive. You can see that comparison chart here. And then we have our cycle analysis table to give you the dates and what phasing we're in. A lot of information, but important. It's all important information. Nothing in here is extraneous. It's not about giving as much as possible. It's about giving you the most important, and then you being able to take that and utilize it for your own trade planning purposes. All right, there's our daily snapshot. Next, I'm going to talk about the Future Speak very quickly. So Future Speak gives you a chance to hear Slim take a good hour, typically, walk through his analysis of the futures markets. He goes through the cycle analysis. You really get to hear the logic from the man himself, the one who's pioneered cycle analysis over the last several decades, and hear how he talks through that analysis on a multi-time frame charts, the weekly chart, the daily chart. It's 6 key segments of the futures markets: energies, forex, precious metals, treasury, stock indexes, grains and softs, and also Bitcoin. So that's a fantastic show. Even if you don't trade all of them, I would strongly recommend that you take the opportunity for the couple of 3 weeks that you have this, and you listen to that Future Speak show. All right, next is trade ideas. So trade ideas. Oh man, this is about as good as it gets. So RV runs trade ideas, does a phenomenal job. And this is where you get to see the core of our technical methodology, cycle trend, momentum analysis come into practice. So each day, typically RV will generate a trade idea, and it fits our methodology that we talked about, that you heard me explain earlier. And I'm just going to click on here, GM. It's inactive now. It looks like it worked out. And so we give you an actual trading plan here. RV steps through each one of those core components of that trading plan and shares that information with you in advance, gives you his logic for why is this a long side trade. It's just beautiful. The approach. If you love technical analysis and you really are trying to improve your skills as an analyst and improve your consistency as a trader, or establish rules for yourself, this is the place to come. And the other awesome thing is that he puts together a brief video and explains his methodology, our methodology, and he walks you through it. You get to hear it and see it. It's just phenomenal work. Just great job, RV, on these. All right. With the trade ideas, though, this is level 3 information, and you're going to get this for a few weeks as part of the preview. So definitely take advantage of it. There is an opportunity to set alerts for yourself. So you can see this little bell down here. Excuse me, I'm subscribed. Okay, so what does that mean? That means that my browser on my desktop here, my laptop, and my phone are all connected to this. So RV will send out notifications when a trade idea is nearing the entry area, if something gets changed, if it's nearing the reevaluation level, or if we're nearing the projection zone. So if you can subscribe to it, I would. If you're interested in being alerted for those, make sure that you go up into your browser, though, and make sure that you allow for notifications and pop-ups and redirects. Otherwise, it'll just get blocked. The most compatible browsers are going to be Chrome, Edge, Firefox. There might be some others. Safari's not a great one. They typically block just about everything. So if you're wondering why Safari's not working, that's why it's best to use another browser if you want to have the notifications. And really, for any of these applications that are embedded into our site, it's probably best to use those browsers as well. So make sure to check out trade ideas each day. All right, next is there's a couple more left. We got the ranking system. So this is another trade planning tool. So we have the Slimulator momentum tracker, which will be the last thing we talk about. And then we also have the ranking system. So the ranking system consists of our focus list of symbols, the 84 what we consider to be best traded stocks, ETFs, and futures. And what we've done is we've put together this ranking system that combines our technical methodology, our key momentum tools. The intermediate here also includes our cycle analysis at the intermediate time frame. So we have our short-term momentum, intermediate, cycle analysis, and then long-term momentum. Then we also have our OBI. We combine this information. We have an algorithm that combines information to give us an outlook at approximately 3 to 6 weeks, so about our intermediate time frame. And then also a directional bias. So basically a sum of the evidence that takes into consideration this technical evidence of ours, and then we have an output for that 3 to 6 week time frame. Now, the great thing with this is that at a glance, you can sort. So if you're looking for adding some long bias or short bias, this is a great tool to use as a cross-check for your own work that you're doing. So like you can see in an instant, I can click on directional bias and then it will show me from very bullish to very bearish. And for option strategies, I love it. You know, I use all our tools for trading. That's why we built this. But you can scroll down, you can get into slightly bullish. So if you're looking for more iron condors or, those kinds of more neutral based strategies or a slight bias, it's just fantastic. And then you can also sort on the specific technical evidence that you're interested in. So if you want to see all the ones that have short-term momentum negative or short-term momentum positive, or you can scan for that. So I can, for the most recent changes, scan for bullish. And so this would suggest that these are the ones that have recently shifted to short-term positive. And it puts them in order of that. And then, not last, but most importantly, you have our charts. So you have our technical evidence, but then if you want to also be able to visualize that evidence on the chart, you can click these icons. It'll open up a new page, and you can see then our technical work with our cycle analysis, our momentum, the slim ribbon, the reversal scout, slim ribbon PO, and the option bias indicator. Just fantastic tools. Again, we talked about this earlier. The logic of this is to be able to provide you with efficient and effective trade planning. And that's exactly what we try to bring to you every day. So this is our ranking system. There are videos up here that go through what I talked about just now. All right, and then the last one let's talk about is the momentum tracker. So this is designed for the investors at a 3-month, that I would say position trader or active investor who are looking at the next few months or so. And what you can do here is you can put in any symbol that you want, and you can take a look at, so like SPY, intermediate. Right now, momentum is neutral. So this is a momentum tracker. That's what the focus is. All of the indicators here are short-term, intermediate, and long-term are focused on the momentum readings. And it gives you that outlook at that 3 months plus. You can look at symbols in a single symbol view, or you can also look at a watch list. So I can go to the energy, right? I can sort what are the most bullish or bearish. I can go to healthcare. So we've got several canned watch lists in here. Okay, you can scan like I did on the other ranking system. Directional bias scans, which ones recently shifted bullish. It'll do that for you. Sort them. We have a pie chart that is really cool to see the differences in the construction of momentum at the various time frames. So a ton of fantastic information in here. There's also charts. So we have a change log in here, but then you get to see that change log on the chart. And what's really cool about this, we use a trading view chart for this, is we've overlaid it with our directional bias. So you can get a visual representation of when that directional bias at that longer term time frame is shifting. So you can see here that we went neutral and win was slightly bullish. That's why it's lighter colored. And then you have the thicker bullish reading that appeared here. And now is still, we're still at a positive reading, might be slightly bullish or bullish, but that bullish condition is in win resorts. So it's a great way to get a visual representation of momentum over time. Okay, I covered all of the services. Now I'm gonna jump into the questions. Looks like we have a number of them. See how many we can get done. So, RV, is there a lot in the chat that we need to go through?
There are a couple here in the Q&A. I've already answered all the questions through chat.
Oh, okay, great.
Yeah.
All right.
Looks like the index question. Can you do a trade idea on the
Sure.
indexes? Yeah.
Okay, so an anonymous attendee asked about a trade idea off of the indexes. So if that person is still in the webinar, I'd like to know the time frame that you're interested in. Otherwise, we can just go through a couple different time frames. Maybe I'll just do that. So I'm going to go to the grid here, and it's asking about a trade idea with the indexes. All right, so let's start with near term. And let's use this based on the information right at this second, okay? And so as I mentioned earlier, what we're gonna do if we're a near-term traders, we're looking at the next 1 to 5 days. And we're gonna start in the 2-hour chart here, and we're gonna determine our bias. And so what we look for is, again, the slim ribbon and the reversal scalp. And both of them at the moment are positive. So our directional bias for our trade idea is gonna be on the long side. Okay, so now we have to think about our entry. What's our entry opportunity? What kind of trade are we going to put on? Now, so there's a couple different concepts here. One is going to be if we want to trade a breakout. The other one's going to be we want to trade on a pullback into watch for maybe the slim ribbon PO or some key areas on a pullback where we can re-enter this. Because what we're talking about is where we are right this second, not talking about where we were earlier, because the trade idea, if you would have asked it in the morning, would have been if we would have saw the slim ribbon turn positive or the reversal scout while the 2 hours so positive, now the trade's on. So that would have kicked off the trade idea in terms of the long side. In terms of levels, so what we like to look for then would be, we'll use our fib retracement tool. We look for a key swing low here. So you can see that swing low came right into that that top end of that short-term support zone. But right now, let's just assume that the high that we just had in the last 15-minute bar candle was the high. We would probably watch for somewhere this is a very powerful candle here. So maybe we get to 42.11, 42.03. Again, so I'm looking for some support areas. The slim ribbon's also a really good tool to help with support. Maybe we get into our 13 or 21 on the slim ribbon. So some kind of opportunity here. We can look for the slim ribbon PO to fire again. So at the moment, and right now, it looks like we might be getting, so if you're a breakout trader, let me just remove this so I can see this a little better here. I'm going to move this text note so I can look. Yeah. So what do we have? 42.27. So if you're a breakout trader, above 42.27 is a confirmation. So that confirmation would suggest that the new leg is higher and that we're on our way to the next upside targets, right? So as part of the trade idea, we understand our time frames. We're looking at the next 1 to 5 days. We understand our directional bias, which right now is positive. we're deciding on what types of trading. Maybe you do both. You know, there's many trades that we do that, you know, you don't take a full position right away. So I might trade the breakout, and then I might trade the pullback. But my bias right now is positive. That's just, it is what it is. It could change, and if it changes, I'll prepare myself for making those adjustments when that happens. But right now, it's positive. If I'm going to trade the breakout, confirmation, then what is my upside targets? So if I'm looking at the next 1 to 5 days, you know, there's a couple different ways that we find our targets. I'll just give you some insight into our approach to this. So I'm looking at the 15-minute chart here. Because I'm focused on 1 to 5 days, I'm going to do a couple different draws. Okay, so I'm going to go from this swing low, this is a nice impulse wave, to this swing high, back to this swing low. And then I'm going to look for some targets. So, you know, we're 42.28. If I was intraday trading, again, we're not suggesting anything, but just in terms of looking at potential resistance areas, you probably are going to have one here, and that's what also fits with this key minor. So a breakout here could run quickly, or you might get that pullback. So that's why, you know, many times I might trade both. Okay, so on the upside, over the next 1 to 5 days, we're reaching near one of the key levels already. So then the next ones would be something like 42.38, 42.50, and then on the high end, you can see these other ones, 42.58 to 42.70, which might take another, let's say, up to another week or so. So that would be the trade idea. Where's the reevaluation level? Well, right at this moment, the reevaluation level, you could decide upon that in a few different ways, but what we like to do is look at, again, key levels. And that key level at the moment, might be, I mean, everyone's different in the way they do it, but I'll put up a couple of them. Oops. And the reason we like using the fib extension tool is it's very objective. And it's just very clear for me as a trader what my exit might be or my reevaluation level. When you think about your exits, you think about them, and it's really important to, again, get very granular with this decision making. You want to think about it in terms of time, price, profit, or loss, right? Your risk reward. So as I'm going to exit this, and with price, it's very clear. There's no doubt. If I hit 42.38, I've hit 42.38. If I'm waiting on some time indicator, it's helpful, but price is about as objective as it gets. And the same with price levels on reevaluation. So price for your targets, price for reevaluation. First reevaluation level might be a close below. It's like today's, near today's low, or a violation of today's low. And then really for this near term positive structure that just formed, right? So we have a key swing low here. This candle gives us a lot of information too. The buyers came in, really, went after that low in terms of support. And so to suggest that this is neutralized, opening the door for some potential lower levels would be something like a close below 41.90. So until we get a close below 41.90, I'm looking at this saying, I'm a buyer. Once we close below that, then things change. If we get up into these levels here, now you're into these levels where reversals can happen fast. I think we've seen the markets just keep running, but you've got to have an area where you're ready to take some off, and if it runs, it runs. It's just the way it goes. So that would be the trade idea. So near-term targets, something like 42.38 to 42.50, maybe short-term in terms of 1 to 3 weeks, but it could happen even faster. You get up into here, and then really, where do I want to start looking for potential opportunities where it might roll over. Well, this is where cycle analysis is beautiful, because you combine the information with the levels, the key levels, and then you show time and price, right? So our time and price. So as we get up into the, maybe the fib confluences up here, as we reach into the late peaking phase, that's a great time to start thinking about, okay, if I'm heavily long sided, does it make sense to start taking some off? If you're a short-term trader, again, it's different. Again, each time frame is going to be different. So short-term, talking about 1 to 3 weeks, or that 1 to 5 days. So I hope that helps. All right, next one was, once the acceleration zone limit has been reached, should that area not be used again? That's a great question. Say it reaches the top and bounces back through the bottom. I'm going to pull up the grid again. So the question is, there's a good example. So we opened and we got up to we went through one of the acceleration zones very quickly. We hit a resistance trigger. We failed. And the question was, do we look at this as another valid opportunity? The answer is yes. Now, is it as pure as the first one? No. However, if you think about it, resistance has been violated. The likelihood of this now serving as resistance and the price levels in here is less. So the opportunity for this to serve as acceleration zone, again, our experience shows the answer is yes. So there's a higher probability that if we come through an acceleration zone once and you really don't break down and you come back through, then it's still valid. And you can see here how, as everybody knows, when you break through resistance, then it serves as support. So we came through this resistance zone. We came into that short-term key resistance where we would expect, expect, there's no guarantees that there would be some kind of consolidation pullback. If the market was going to fail, you would see a very strong reversal off. Because we only had a minor pullback, and interestingly, right to that, the top end of that acceleration zone, which was resistance, now becomes support, and then we rally again. And again, what's cool is to look at how the reversal scout stays positive. So as that intraday trader, maybe you have another time frame, shorter time frame. Maybe you use 5 minute, 3 minute, 8 minute, whatever it is. The key is that your directional bias stayed positive. So on this pullback, again, this is for those scalpers, intraday traders. For me, this is a great trade opportunity, because you get into resistance, you pull back, reversal scout still positive. And once we got this, once this bar here, right, this candle give us a new higher high, I'm probably looking at a shorter term time frame, maybe 8 minute, 5 minute, 3 minute, and momentum turns back positive. Boom, we have another breakout. We still got almost 2 hours in the session to go. And what could happen? Well, I mean, we identified this key level. We might, these act as magnets too. You got to remember that key levels are like magnets. So we might get a pop through here. We might get another pullback, and then maybe we get another rally to close the end of the day strong. So we'll watch this level closely. All right. Could you please describe what P1, N1, P2, N2, etc. means? Sure. There is those identifiers are utilized in our ranking system, and those are utilized in a couple different places. I'll just jump to the ranking system real quick. So first, let's talk about it here, and this is our intermediate time frame for our cycle analysis. So really, this is degrees of bullishness or bearishness, and there is a legend or a key for those. Rankings overview, we go through what those are in terms of the cycle phase rankings, right? Slightly positive P1. So typically there's a sign that we're, some kind of breakout is starting to show. And then we have P2 and then P3, which is most positive. So that would be a positive cycle configuration, pull back into some support zone. And we looks like we have another likely breakout during a rising peaking phase to take us to new highs would be an example there, and then vice versa on the downside. So the ranking system, those P's through N's, are different degrees of bullishness and bearishness, with P3 being most bullish. And then on the option bias indicator, it's similar, except we don't use yellow. We use, let's see if we have any in here. Might not have any at this time. Let's see. No, not yet. We have an indicator that would P1 orange or N1 orange, which are indicating an extreme overbought condition with a likelihood of pullback. We just had that in gold as an example, and we got a pullback within a. Let me pull it up so you can see it. It's an interesting example here. So here's gold, and again, this stuff is provided to you before. We don't do this after the fact. So RV had indicated, myself, we indicated these key resistance zones again. So you might have had a long side bias, short term, long side bias, but that's why it's important to be aware of where these key levels are. If you're a short term trader, if you're that longer term trader, well, you would expect then, if we now went into an intermediate positive configuration, that when you get into the support, that you might consolidate, and then we resume that uptrend, especially as you enter new rising phase. So RV might help me out here if I'm seeing it differently. But an example of potentially a P3 would be a pullback and then another rally into here, into that rising phase. Would probably give it still a P3 ranking.
Yep, that's right.
Makes sense to you? Okay, good.
Mm-hmm.
The initial breakout, something in here, RV, would be probably like P1, right? When we saw this
P1. So P1, it actually got P1 a couple of days ago, right? Back at those highs.
Oh, I'm sorry, the cycle rankings P1.
P1, yeah, P1 would be off of those lows. It
off
would
these
be around
lows,
P1.
right? Because this is a first indication shifting from a more negative configuration to now a positive, right?
Right. Yep.
And then in terms of the option bias indicator, where we have an extreme overbought condition, you had these warnings start coming in, and then we got that pullback, right? It's a sharp pullback, but it's a sharp pullback within a bullish configured pattern. So that's just, that's important to note, that it's likely that maybe we get some more consolidation. Could this be the low? Maybe one day in the downside, possibly. And we enter another rally phase, or do we get some more chop in here? Maybe one more attempt, and then we go on to make new highs. So we'll watch that closely. So someone asked. So we just have time for about one or two more questions. We'll wrap it up in about four or 5 minutes. But it looks like the slim ribbon PO just changes colors when the slim ribbon changes colors. How does it differ? Good question. So here's another good example here. The slim ribbon PO, the coloring represents an alignment with the slim ribbon. However, it is combined with the projection oscillator, so you can see opportunities for confirmation of the slim ribbon when it's in a resuming a dominant momentum condition. So you can see here that we had positive momentum, and then as the projection oscillator pulled back into this oversold area, the slim ribbon still stayed positive, and then you get the arrows indicating to you that there's a likelihood of the resumption of that bullish momentum, and that's exactly what we saw. So again, it's a really good way to get perspective on momentum. When something's pulling back, how strong is that pullback? If the pullback is not intense enough to shift the momentum, then there's a likelihood of a resumption of that momentum, and that's what the slim ribbon PO is giving you. So that's the difference. All right, and then looks like the last one we got here is maybe RV, if you could help out with that one. Looks like it's a trade idea question.
Yeah, so we're looking at MGM. Let me just pull that up. Give me 1 minute.
Sure, thanks.
So the favorable entry is that zone that this person posted. So let me just share the screen real quick.
All right.
Okay, so this is MGM. So we have been looking for a low to form here. I'm just going to read the question, and we're looking for a move up. Okay, if we look at this daily chart, what we're looking for is for this to pull back into this zone here and then get a move back up. So we're looking for a little bit of a flag to form and then for this to move back up. Why? Because we have this low do here, and then we would look for that rally to then push off of that low, right? So we'll have to see if this does give you a move back down, but if it does, we would look for that to push back up. So is the intent to wait until price comes down? Yes, that's what we would be looking for. We'd be looking for it to actually trade down to this area and then get a move back to the upside. And then how long should one wait for price to get in to the range? I mean, that's based on whatever you want to do. We aren't saying anything about what we what any one person should do. We're just saying this is what we would look for right now. That's all.
Excellent. Very good. Yeah, as I mentioned earlier, if you're a breakout trader on momentum, you might not wait for the pullback. But again, there's nothing that says you have to enter a full position the first time. So you might trade the breakout. So Arvi, maybe if you could just pull down that Y-axis on the daily chart there a little bit, because you might get that breakout and we might run all the way to the target zone, right?
Sure.
Or as Arvi described, you might get some chop. Maybe we get into that minor low, we get a pullback to the midpoint or the third level, 21 EMA on the slim ribbon, and and then it consolidates there, and then we rally.
That's right.
We don't know that. So again, there's nothing that says you have to wait. Just be strategic. Know that the reason you're entering it, and again, there's a high probability it might break out, pull back. It could do both. So
that's right.
This is a great example of how Arvi described using cycle analysis along with momentum to get the trade idea established for yourself. And then on here, you can see where that reevaluation level is too. So it fully represents the concepts that we're talking about. Awesome.
Great.
All right. I think we, was there anything else or?
Sampath is actually asking about monthly membership fees.
Okay. Yeah, just email. Go ahead and email Matt at askSlim, and he can help you out with that. In terms of a commitment, can you cancel anytime? Yeah, I mean, there is a subscription membership. Typically, the better offerings are quarterly, but you can cancel anytime. We wouldn't be rebilled.
Right.
All right. Well, I hope this was helpful for everyone. We look forward to having you as a participant in the Popular Services preview. We'll have another askSlim live session. I think Arvi, right, coming up on Tuesday.
On Tuesday, yep.
Awesome. So we'll make sure everyone's invited, and have a great weekend and keep in touch.
Okay. Thanks, guys.
Take care. Bye-bye.